South African economy grew by 0.8% for the year 2018. This follows Stats SA's determination that GDP rose by 1.4% in the fourth quarter of last year. Sub 1% economic growth is paltry for the South African economy that desperately needs to grow in order to alleviate a number of societal ills, which include high unemployment, inequality and poverty. And this can only happen with an intensification of investment levels, which just isn't happening. To take us through the latest GDP print and its implications, I'm joined on the line by Maarten Ackerman. He's the chief economist at Citadel. Maarten, it's just a 0.1 percentage point higher than the National Treasury pegged growth for 2018. So which sectors performed better overall and which ones were the laggards?
Yes, I think that, it's still a weak number. But we can look at a couple of positives, which I think is very important. So some of the biggest contributors came from agriculture. Agriculture increased about 7.8% for the quarter, but it is a fairly small sector, so the overall contribution to GDP was actually quite small at about 0.2. But that was definitely one of the bigger contributors. Also transport, quite a big contribution, that was the biggest. Also about 8%, close to 8% for the quarter, and about 0.6 to GDP. And then very importantly, manufacturing. Manufacturing made quite a good contribution, increased about 4.5. And why I'm excited about that is that, manufacturing is one of the sectors that we actually need to get going, because that's the one where we can create more jobs and resolve a lot of the issues in terms of unemployment. Some of the weaker, or the detractors, was obviously mining. That was very weak, down almost 4%, which is a pity because that, as next to manufacturing, should be one of the driving forces, not only for economic growth, but also for job creation.
Yes.
And we understand that, the mining is under pressure for many other reasons as well. We've seen a number of strikes, probably lower global commodity demand. And we are battling with structural issues at a lot of our mines. So quite a mixed picture, but, I am positive by seeing things like manufacturing starting to contribute more. That's really positive.
Construction not doing very well at all.
Our construction is not doing well, and also if you look at the expense side of the economy, gross fixed investment is still down -2.5%. That's still an indication that we don't really see new investments coming into the economy yet, despite all the attempts from government to create a more investment-friendly environment. And that's one of the things that we need to see turn around to really have an impact on resolving the structural issues and creating a better environment going forward. I don't think that is likely until after the elections, where there's more certainty around policy, also more certainty around, the solutions for Eskom and reliability of electricity or energy supply. So all of those things, and you can add to that the issue about land and property rights. All those things need to fall into place before we probably will see some rebound in fixed capital formation. But that is important because we need to see investments in the economy before we can really see a further or sustainable pickup, rather, in sectors like mining and manufacturing.
When all is said and done, these economic levels are lower than population growth. So on a per head or a per capita basis, economic growth is actually regressing.
Yes, 100%. So, we've actually been in, call it, population recession, if you want to put it that way, per capita recession, since about 2010, because we struggled to outpace the growth in the population. Although we've got positive GDP growth, the population is just growing faster. So we can be slightly positive about the fact that we've now got 2 positive quarters in a row. So that's leaving the recession that we experienced at the beginning of 2018 behind us.
Yes.
But those numbers are still not strong enough to actually outpace the population. And until we get to that point, we're not really going to make a dent in the unemployment rate. Because unemployment is growing slower than the economy. The population is growing faster than the economy, and therefore the unemployment rate, or the gap between the two, will keep on increasing. So yes, although it's positive numbers, it's definitely still a long road ahead of us to actually get to numbers that will start making a real difference.
Yeah. So while the consumer was under serious strain last year, it was the consumer that came to the party and held things up to a degree. But what's the outlook for the consumer this year in terms of spending, especially as we head into a series of expense increases in terms of taxes, heightened inflation, particularly food inflation, and of course those energy tariffs to be announced sometime this month?
I think on the expenditure side, the number showed household expenditure increased by 3.6. So that's a positive number that is obviously very important. We are a consumer-based economy, and we want to see healthy growth in that part of the sector. That was also, there is some mixed signals because we know that last year has been quite difficult for the consumer with an increase in VAT, a lot of increase in petrol. We had a very good Black Friday, so that's probably contributing to that number. We saw that into the retail numbers that came out during the latter part of 2018. But don't let this number create the impression that, the consumer is out of the woods. Like you say, we're still dealing with a lot of headwinds coming in terms of still high unemployment. Petrol is going up again. Inflation seems to behave at this point in time. But mostly the consumer, if you ask them about their financial position, they're not that positive yet.
Yes.
So although that's a positive number, we're glad about that. But, the consumer still can, there's a lot of things that can fall in place that can create a better environment for the consumer base in South Africa.
That was Maarten Ackerman. He's Chief Economist at Citadel.